Our Bloomberg Radio Plus app, free for iPhone and Android devices.
Kathy Matsui is Chief Japan Strategist and Co-Head of Economics, Commodities and Strategy Research in Asia for Goldman Sachs. She's on the line with us from Tokyo this morning. Kathy, good morning and welcome to Bloomberg. So is 2014 going to be a much more volatile year than 2013?
I think so. I think in 2013 you obviously had sort of an about face with respect to Japanese policymakers really becoming determined to fight deflation once and for all. So you had massive both quantitative easing, monetary stimulus, as well as fiscal stimulus applied to really jumpstart the economy. This year, I don't think you're going to get major bazooka-type policy announcements. I think it's more of a question of looking for the fundamental improvement both in the macro economy and at the corporate level.
Let's pause it right there. Hello and welcome in. From Sunnyvale, California, I'm Mark Vierra, and this is my weekly technical analysis video. This is not any recommendation to buy. This is for educational purposes only, and just going to share with you my basic analysis, look at some trend lines, just some moving averages, some volume, this and that. Nothing too complicated. So technical analysis is it's not a guarantee. This is something that we do to try to find entries, exits. It gives somewhat of an edge, but this is what we do. And I always like to start off with the monthly chart. Take a wide lens view just so you can see the nature of the trend lines here, how far back they go. This is what I got, and we'll just zoom in on that. Alright. So here we're zoomed in a bit, and looking at, we're putting in, slightly higher highs. Okay, not much, but a little bit. Which is fairly positive. Of course, this is a bearish candle, and I think if we broke this trend line, then we would be leaving open, the possibility to check these levels. I think we'll pay attention to this trend line, and of course, our ultimate longer term trend line would be down at these levels. I'm going to get into volume later. We're going to see that I think we'll see the weekly trend line being respected. Let's see, let's start off with this one. Okay, you know what, let's back up a second. There was another monthly chart here, and this was what I call a pivot. Blow this up. Looking at way back here, and if I kept this trend line going steady off of here, I can see oscillation, alright, above and below this. So this is a pretty key looking pivot to me. Struggling to get above here. It broke above, and now it's getting support off of that pivot. So I think that's another positive sign. I think this week I'm seeing some positive action going on here, and let's get further into it. Let's see, what do I got on the weekly? Here's another key pivot line that we broke below, and now we're respecting this trend line. And if we look at the trend channel, let's see if I got we can zoom in, and this would be a rising, let's see, all right, this is the weekly rising trend channel that I'm looking at, and we've got touches all the way along this thing. Broke down below it, but I'm not counting that, and here we are doing a little slight bounce off of that trend line. So I think we're probably going to see some action up here in this area. Do a little bounce, and then if we put some action here, we might be building another shoulder, and we'll look at the possibility of a head and shoulder, possibly. The other thing I'm looking at too is the level, the previous level finding support from that, making this rounding top. So I did some measurements on a daily round, or I did weekly round top. So breaking below this level would be key, and we might see lower levels from a rounding top formation. And I have measurements on that. Let me take a look at the rounding top. Here we go. So usually I wait till a confirmation break to do measurements, but we're so close. This 1768 here, this would be a break below that, and we might be looking at some further downside. So we really need that price to hold, and I think volume is telling us. We'll get into volume later. Let's take a look at some daily charts. So let's take a quick wide lens view. Here's the daily trend channel, and then we want to zoom in on that, and I'm looking at, alright, this trend line and this major longer term trend line, and below these lows here, this low and this low here, and this is what I'm coming up with for a range for the week, and that would be my guess on what's going to happen. And that's just a basic trend line analysis. Okay, but we're going to put context from volume in on that, and just want to get through some trend lines here first. For moving averages, let's see here, just on top of the 100-day standard moving average. I think the between the 100 and 120 would be a good opportunity that we might see some buyers coming in on that. Fibonacci levels, this is always a good one here. Support at 38. I always say the 50% is where you're going to see action. Now this 38% corresponds to the previous kind of chopping low down in here, and this is where I'm getting that rounding top action. So yeah, it's hard to say. You never know for sure what's going to happen, but take a look at some basic patterns on the daily chart. We have a confliction between a bearish and a bullish pattern. This would be a bear flag in here. It's a little kind of a sloppy-ish looking flag in terms of striking the lows, but we could call that a bear flag. I got no problem with that. One of the more major ones, I think, is this falling wedge, and like I say with parabolic moves, they always end up how we think they're going to end up, and nothing can fall straight down for too much time, as well as nothing can just climb, straight up for too long of a time either. So I think we're going to see a bounce this week. That's my prediction. What else do I have in here? Patterns. Well, we did get our double top equidistant measurement, so that target was met. We got the first target here from last week. We did some measurements in the right angle descending broadening pattern. We had a break here. Our conservative targets met, and equidistant still we'd be looking for 1750. I don't know if we're going to see that, but okay, let's get right into volume. So I want to get into volume, and let's just refer back to the weekly chart real quick to put what I'm looking at is candle spread and volume spread analysis. We look at the amount of volume. We're seeing on the weekly chart a pickup. We got more volume and a smaller spread. So that's important because that tells me that the market price is slowing down. And I always speak in terms of speed. Market's moving fast. We had we had a very bearish week, and then now we can see price slowing down, and we can see this, I want to call this stopping volume, and I think we're seeing demand, especially this candle right here. You know, these topping tails here, that's kind of an issue. That leads me to believe that we're still going to be looking for a stop running effect. I think institutions will probably try to, we'll probably see another high volume, by time picking up. That's my guess. That would give us a pretty good Wyckoff Creek and maybe a springboard off of that to see some higher prices. I'm just guessing here, but I do see this as a positive sign. This volume, we're finding support. This is we're building stomping down a base level. Of course, that's no guarantee. We could see lower prices that break through the base, but that's yet to be seen. I think we're going to see some positive action this week in the market. And let's look at what else do I want to see? I want to look at the lower time frame, the hourly chart. This is a 3-month point of control here. We're building up. This is pretty much acting as a resistance right now, and I see price bouncing above and below this volume node. This is volume by price, and we're seeing that as a pretty good pivot. So that'll tell us anything above that, and we're looking for bullish. And if we stay below that, we're sideways to possibly bearish. But I do think we're finding a foothold here. Also knowing a little bit of higher highs on our RSI. This isn't enough information to go on positive divergence. So that has to play out a little bit to get more information there. And let's see. Hourly is really where it's coming together, gives us more of a clear picture on these lower prices being bought up. Here's a good example right here, this candle, and then we're moving up from there. We're seeing a declining volume, so I'm looking at this as demand. All right, and then here we do see these higher RSI lows with this flat sort of price. So I think that's a slight positive divergence that's going in there. Last volume chart I want to look at here. This is non-expanded monkey bars, and we can see where price sped up. We had a fast-moving market, and now we're building up this structure here. So I find that as another positive sign, and this is showing the market that's slowing down, trying to find out where a good fair price would be, and that's my thoughts on volume. Now the other thing I want to look at is our risk instruments. How are we gauging our risk? One of these things is our Volatility Index. And we can see that, what's this here? Oh, there we go. Yeah, the old saying is VIX is low, time to go, VIX is high, is time to buy. I don't know if you want to call that a high VIX, but, we have just an overall decline in the VIX, and I see that as just a basic trend that's going on. We could be seeing our VIX topping out. Another few more positive signs I see is in U.S. Treasuries and the dollar. It looks like to me that this rising wedge is going to start getting some action out of here as it gets closer to the vertex. So I think we should see a slight decline in U.S. Treasuries. This pickup of volume right here is telling me that this thing wants to climax up at these higher prices. And comparing this also to the yield, You're getting at some pretty extreme levels in the yield as well. So whether this is a buying climax or not, I don't know, but I do see this this volume spike is telling us something. So we could be bouncing down a little lower out of these U.S. Treasuries. And one thing now, dollar U.S. Treasuries have been sort of correlating positive, and I see now they're breaking away from that. You know, news affects the U.S. dollar. Positive news affecting stocks in the U.S. dollar is what we should see happening, but we saw a little bit of a breakaway from that, and now here's the lower this yield keeps going, the more stocks are going to look attractive, and we're getting a smaller bodied candle here, so I think we're seeing a little bit of brakes being put on the selling that's going on. The other thing too is U.S. dollar, seeing the same thing. You know, we have a rising channel here, but I think we're going to see, you know, respect paid to this upper trend line, and we will most likely, I think, see a little bit of relaxation. Of course, I've always said the U.S. dollar is going to remain stable overall. I do think we will be bouncing back and forth between this rising channel. So lower U.S. dollar typically will suggest that stocks will get a boost from that. So that's and I think that's all I really want to cover in this video. Pretty straightforward this week. Of course, now you can always find me HotStockMarket.com. Got my trading log in there. For YouTube users, I'll have links provided to all this stuff. Another source of information you might want to check out here is subreddit StockMarket. It is always a good place to go to find information, and you know, that's what this video is about. Just want to try to relay a little bit of information. Hopefully you find this useful, and hopefully I will see you on the boards.